Most welcome to the Holiday Mula Mind holiday program for students, for parents, for youngsters, for high school students who are in holidays. So this program is in collaboration, is brought to you by REB in collaboration with ICPA. My name is Jackson Rugambwa. I have a master's degree in economics, so I work with Rwanda Finance Limited. It's a public company. So I'm very privileged to take you through this session. So this session is entitled The Power of Financial Literacy. We know that every decision we make in our lives, it has something to do with finance. Be deciding to go to school, it involves money. So financial education is very important for everyone that has a life, because in today's life, in today's world, in today's era, you only need money. Yes, you can need other things, but money really is at the center of every decision. So having knowledge about money is the most important thing these days. Financial literacy has been proved to be one of the catalysts that really enables people to make an informed decision. If you don't have enough knowledge about financial literacy, you are likely to take poor decisions or decisions that are not really in your favor. You end up in debt, you end up not really prioritizing your finances, and then you finance things that you don't have to. We have previously covered elements of assets, liabilities, expenses, income. So now we are going to look at basic accounting, financial knowledge, the elements of bookkeeping, recording every transaction you make. And we are here with some students from APAD. They are going to introduce themselves. Of course, we are having many students online. They are logged into the website of ICPAD and the website of REB, their official YouTube channels. We are streaming live. You can join us anytime. And if you don't have time now, you can even save the you can even save the link, and then you watch us at a later time. We are going to introduce. You are going to introduce yourself. We are 5 in the audience. There are 5 students. They are going to tell you who they are and where they are coming from. Just tell us your name and your school, probably your form. If you're in senior 6, say it. Let's start with you. Brez? Yes.
Yes, I'm senior 6. I study at APAD.
APAD, which combination?
Accounting.
Accounting, excellent.
Yes.
By the names of Aina Tukunda, I'm coming from Sedeki Chapade. I'm going to senior 6 accounting.
Senior 6 accounting. Yvonne?
Okay, thank you. By the name of Tishim Yvonne, I am senior 6 accounting at APAD.
My name is Kuzela Eric. I'm senior 6 accounting. I started at APAD also.
My name is Jukundi Benjamin, and I'm from APAD. I'm in 6 accounting also.
Great. So, because they have basic knowledge, working knowledge on accounting, what we are going to cover today, they know much more, and they can share with you. Whoever is online, whoever is watching this segment is going to benefit from their knowledge, because they are going to be sitting for national examination soon, and I believe they are prepared enough to do the accounting paper and excel in it. So we chose them on purpose because they are going to be talking to us. It's a sharing platform. It's not a session where you have a teacher and student. It's not a session where you have a teacher and student engagement. It's just more of sharing knowledge and experience, because they know much about accounting, and the topic today is just basic accounting principles, basic financial literacy principles that you need in your everyday life. We are going to keep it simple, very interesting, very engaging, so that whoever is watching the show is going to be really interested in knowing much more. So if we start financial education, why do we have to cover financial education these holidays? Remember, we are students in holidays. We have been getting pocket money, to spend at school, to buy small stuff to support our lives. We also get school fees paid by our parents, or some students are paid for by government. But we have to really understand what is money and how money functions, and then whatever we buy or whatever we spend on, do we keep a record of that? If we do, how does it really impact our lives? How do we how does it inform our decision making? Because at the end of the day, the most important thing is to have a life that has goals, a life that is having a life that has a mission. But to achieve those goals and a mission, you have to be financed by money. And money is a resource, like any other resource, like time. Is a resource, like any other resource, like time. So it's a very expensive resource. So if you waste it, or if you don't get track of it, like if you don't follow where the first and last coin of your money goes, then you are not a rational being. So why do we value? Valuing education, knowledge and initiative create opportunity. Knowledge is power. If you have knowledge about anything you want to dive into, you are much smarter than a person who has no knowledge and he's trying to indulge or trying to endeavor into something that he does not master. So always remember, education helps you grow. It helps you grow, makes you wise, makes you take initiative and open new doors. If you are equipped with knowledge, then you are ready to go. When you study, ask questions, try new things, you create your own path to success. We believe that education, knowledge, and initiative are the foundation of growth and success. By valuing these principles, we open door to endless opportunities, both personal and collective. Let us encourage the culture of learning, critical thinking, proactive effort. Together, we can build a future where everyone has a chance to thrive. Remember, opportunity favors those that are prepared. So you get knowledge today, you get skills today. That's when you are sure that the future is in your control. But if you don't have skills, especially financial literacy skills, and you're going to start a business, you're going to earn income from employment, say, then this income may not be useful to you because you don't know how to manage it in a proper and a sounding manner. So money functions between a dream, a dollar, and a plan. You have a dream or you have a goal. Between your goal, between your dream and a plan, you have to inject in finances or money. And for you to achieve your goal, you have to spend your money efficiently. One of the richest men, Warren Buffett, said the best investment you can make is investing in yourself. The more you run, the more you earn. If you have knowledge, you have money or you have power. Why knowledge is power? How can we learn from others? That's why we invited students who really are undergoing training Yes, training in accounting to support us. So if we dive into the financing knowledge, financing, critical thinking in financial literacy. Finance impacts nearly every part of our lives. Think about it. In every decision you make, money gets involved. Is anyone who can tell me any activity you do nowadays and it does not involve money? If it is a goal, in one way or the other, you're going to have to need financing. If you take a decision to start a business, the first thing you think about is, where do I get finances? The capital. But if you get financed by a bank or by yourself, equity, you still need to account, how are you going to spend this money? So financial literacy is very, very important in developing critical financial skills, such as creating a budget. Creating a budget may sound something small, may sound something basic, but it's very, very critical. Retirement planning. Many of us going into employment, students, you are thinking about getting jobs, but you're going to work, you earn money, but there will be a time when your energies are diminished and you can't work anymore. That's why you have to think about your job, but as well as thinking about, when do you get retired? When you get retired, where do you go? How do you finance the rest of life? Remember, you retired from job, you are tired and retired, and life continues. If life continues after your working age, how do you survive? Then managing risk. From previous investment and risk-making session, we covered managing risk. So managing risk is a critical element of financial literacy. Managing debt. If you ever involve yourself in a business, whenever you start a small business, or in case you want to finance your expenses and you get short of cash and you want to apply for a loan, and then you don't manage this loan very well, then the loan may really put you down and may drain all your finances, and then you end up being bankrupt. Managing taxes. So taxes are contribution, mandatory contribution to the state. Every income you make, every fortune you make, there is a percentage that you have to contribute to government, so that government can finance infrastructure, it can finance all these expenses that cover our social protection needs. So knowing all these elements or mastering them really gives you a leverage when you want to decide on financial decisions. They are not just financial skills, they are life skills. If you have them, if you master these skills, like creating a budget, retirement planning, managing risk, managing debt, managing taxes, these are not just financial skills. They are life skills, because life today is really connected with finance. There's no way you can separate the two. So take an example of a skill in budget. Students from accounting, accounting option, you know very well that if you make an income and you want to do your expenditure, you want to buy your stuff, you want to buy your whatever you may want to buy, if you don't make a budget first and you just spend, then you may end up not spending on the key thing that you wanted in life. You may not have enough to save, because saving is a very important thing. So if you don't have enough for saving and you spend more on expenses, then life might be not easy for you. So that's why you budget before you you even earn. And you budget before you spend, because that's only direction that your money will follow. If you make a budget, you earn money, and then money is going to follow a direction of budget. But if you just spend and then budget later, then you won't have anything left. So making a budget gives you clarity and control over your resources, and you can see where you stand. It's very important to know your status, your financial status. Are you a middle-income person? Are you rich? Can you cover all your basic needs? Can you afford the things you want in life? Because some of us, you spend more than you earn, and then you find yourself in a debt. So these elements, they help families, they help individuals, they help students. Everyone that is involved in a modern economy should be a rational being, should be a rational agent to make an informed decision, so that they guide their decision making, they guide their mission, they guide their goals. So choosing to live within your budget is not something that should be taken as an option. Everyone should be able to stream their behavior, their expenses into the boundaries of the budget, the boundaries of your means. Finding opportunities to save. We don't save because there's an opportunity to save. We save because we know many opportunities or many goals are going to be financed by our savings, and savings also help us when we start to meet uncertainties. When we are not sure of what is coming our way, saving can save you. So that's why we have to provide for savings. Defining what your goals are. Defining a goal or defining your mission, your life mission, helps you in financial decision. Because if you earn money but you don't know what to use the money for, then you may not attain to your mission, your goals. You first define your goals, then money can finance those goals. Dedicating resources toward goals is essential. These are the gains you get from making a budget, because if you make a budget, it will allow you to choose which kind of life you want to live. It can help you get into opportunities of saving. It can help you defining your goals. It can also make you dedicate resources towards those goals. But if you don't create a budget, then your goals will be in disarray, they will be disorganized, they won't be really in a priority consideration. So if you see, for example, in this diagram, you find that financial literacy in investment decision making, it helps in guarding against fraud and scams. It helps in understanding investment options, assessing risk and return, setting realistic goals, analyzing market trends. All these are advanced financial skills. Managing personal finances, this one we already covered. So these are advanced goals of financial literacy. So once you have financial literacy, you are a rational being that can really not be influenced by emotions. You can take decisions when you are sure they are going to yield your personal goals. So let's now start the subtopic of bookkeeping. Yes, financial literacy mainly revolve around knowing the basics of accounting, knowing how money works, knowing how to invest, knowing how to save, and many more. But bookkeeping is very important. I know students in this room, you are much acquainted with bookkeeping as the basic accounting principle. So bookkeeping is a process of recording all financial transactions of a business in an organized and systematic way. But now, bookkeeping can also be done by an individual. It does not only have to be a business. It can also be by a person, individual tracking of personal expenses. No, it involves also keeping track of especially money coming in, money going out, receipts, invoices, and payments. This speaks more on a business level. But for a personal level, you can be, your expenses, bills, salaries, all these people earn money and they need to track where money goes. The goal of bookkeeping is to ensure that financial records are accurate and complete and up to date, so the business can understand financial position and make good decisions. So if you make bookkeeping at a personal level, you are able to know your financial position. You can know, I'm broke today, I'm expecting money tomorrow, this is where my yesterday money went, this is what I want, this is what I don't want, and this is what I can forego, this is what I can postpone to consume and consume later. So it will guide you. So bookkeeping is very essential. It's just recording every transaction you make, every expense you make, every income you earn. So you get track of them so that you can, at the end of the day, be able to decide where to spend and where not to. So bookkeeping is a small component of accounting. Accounting is the process of recording, classifying, summarizing, and interpreting financial transactions, provide useful information for decision making. Accounting is just to guide decision making, because if you don't, there is a saying in I think it's a sim of an icon sim for Institute of Statistics. They say if you don't count, you don't count. So accounting is very essential. You have to record whatever you are doing in terms of finances. Then you classify them, because if you just record anything that comes your way, you just record any transaction, but not in a systematic and an orderly way, then interpretation becomes a challenge. You have to record. Yes, you'll be confusing yourself. So you need to, before you interpret, you have to classify. Every folder, every ledger, every document should be in its own category. So that's why we have assets, liabilities, equity, revenue, expenses. All those are classifications of income and liabilities, income or expenses, status of liabilities and assets. All these help us to know where do we put what and how do we interpret what does it mean by having equity more than liabilities or assets combined. So these financial terminologies, if you want to record a transaction, you will have to follow their classification. So with assets, you already covered this. Anything that is of value and can bring cash into the portfolio of business is regarded as an asset. Liabilities, this could be anything that a business owes other businesses. Equity, this is the assets minus liabilities to determine the total value of the owner's equity. So revenue or income, money earned from salaries and services. Expenses, cost incurred to earn revenue. This is in a business perspective, but for expenses, you can have expenses when you're not going to earn any revenue from it. At a personal level, you have expenses for yourself and they are not meant, because here if we say cost incurred to earn revenue, at a person, this can be, it can apply only for on business, but for a personal level, you spend and you don't earn, you don't earn. So that's why we are mixing the personal level and the business level. So it depends on how it applies. So we now go through the basics the basics of the accounting documents. The basic accounting documents, when you have a transaction and you want to record it, you first record it into a journal. But a journal is just a big book. If, for example, you take a piece of booklet here and you just want to record any transaction you make, you just put it in an order. You just say, today, on this day, I bought this and that. Then tomorrow you add. You don't have to classify anything in that way. Just record them as they come. Then from there you go classifying until you produce very good financial statements. But as you cannot count and classify your documents immediately, because you can just travel with a piece of paper, you do your journal. Journal comes from daily thing, a day, something, transactions you made that very day. Whether expenses, whether income, just record them. Then in that general book, it is going to, when you get time, you are settled, and now you can take them into ledger by the categories. Yes. So now, if we start with a ledger, because a journal is just a book or a file where you just record daily transactions in their order as they come. But the ledger kind of starts to classify, starts to organize. Now we are starting to organize our books from, not mixing cash purchases, not mixing rent with sales. So we can have an individual account. Now, there are totals. You can say total cash because you can record cash on Monday, cash on Tuesday. Then you need to sum up all this cash into one account, and you present that account in an organized book called ledger. So ledger is a book or a system where all individual accounts, e.g. cash, sales, purchases, etc., are maintained. So when you open this book or you open this file, you'll find every component of your income or expenses is represented. So some accounts can be debit, others can be credit. But at the end of the day, you may not want to balance. Sometimes you may not want to balance them. But if, for example, cash, you can have cash recorded in two columns. You have cash, debit, and credit. That is particularly for cash. But other accounts, many accounts, they always fall in one category. You either record the total balance of a debit account or a credit account. For example, sales, they're always in credit. So we find that you record these accounts in their form and in their category, whether debit or credit, depending on how they balance. But some accounts, for example, cash, can have two-sided, can be recorded in two sides, the side of debit and the side of credit.
Why so?
Because you can have cash. You can have cash in credit or debit. Because, for example, if you have been getting cash out and cash in, so you can say purchases. For example, it's categorically clear that purchases, they are in debit, but cash is a very fragile asset. It can be earned, it can be spent. So, but for purchases, for example, purchases, you're only purchasing and you're losing cash. But cash can come in and cash can come out. So sometimes you can have cash recorded on credit, on both credit and debit, depending on where this cash is going or where cash is. Because cash can come your way or cash can be going out. But for purchases, as the word purchases, they are directly, you can't have purchases going out. The purchases are always coming, but cash can go and come back, depending on the transaction you make. So now let's talk about primary accounting documents. Primary account documents, these are source documents. They are documents in which when you're recording in a journal or you're recording in a ledger, auditor will ask you, where did you get this information? What is the proof? How do you prove that this is a purchase? You have to, if you are recording a purchase, or for example, you at a personal level, you want to record school fees payment. If an auditor comes or you want to audit yourself, the document you present, if it is bordereau, if it is a pay slip, if it is a bank slip, that is the source document. So those source documents are very important in financial literacy, because if you don't keep record of that, then you can't be able to trace. If you have mobile money nowadays, you can be able to check and see what do you use the money for. Sometimes you check your phone and there's no balance, and you wonder, how did this money go out of my phone? So you have to get the primary invoices, the primary documents that represent the purchase, the sale, the income. If it is a payment that was made to you, it is a salary, you got a message, and you can record the message number. So primary accounting documents are the source documents. Leave alone, you can be not having enough skills to do accounting, to do bookkeeping, to organize your books, but at least if you know how to manage these primary documents, you are at least better than a person who does not really know how to use and keep these documents. So primary document is the starting point of any accounting system, because this is where information come from. Primary accounting documents, also called source documents, are original written records that provide. We are using written because these materials were developed, accounting science was developed when there was no ICT. So we still keep the word written, we still keep the things like ledger, journal. They're no longer existing because there are systems now. But the basic accounting starts with knowing those documents. Many of them no longer exist, but that's why we are saying original written records. It may not be written. It can be a picture. It can be an SMS. But initially, when accounting was developing, it had to be a written record that provide evidence of financial transaction taking place. Their starting point of accounting process, as I mentioned, they are characterized by key features. One is they are created at the time of transaction. They are only created when the transaction is happening. It's not like a balance sheet that you create at the end of the year, but these ones, they are created at that very time when you are doing the transaction. Some can be even created before the transaction, but in the process, for example, a quotation, I may give you a quotation to know my prices before the transaction happens. But at least it is in the process. It's always either in the process of making a transaction or at the time of transaction. So it shows what happened. That's what auditors look for. When auditors come to any organization to produce an audit report, they say, when did this transaction happen? Which parties were involved? What were you buying? How much? Who was involved? Provide the basis for journal entries. So these documents, if you present them smartly, you arrange them, depending from in accordance with the dates they were transacted, then you'll see that already you have organized your journal. So journal is a general book, as we said, a general book that captures daily transaction of a business or any individual interested. So let's start taking one by one, understanding what are the key source documents that we get information from and record them in journals, data in ledger, and then in a trial balance. So a quotation is just a representation of prices of a business or a client interests. So if you come to my shop and say you want 15 computers, you want this and that, and you say, send me a quotation. We may negotiate from a quotation. Quotation, after I send you a quotation, then we can hold a conversation on how much discount I can give you. But a quotation represents general prices of items before what? Before engagement, before an offer is made. So you just tell me, give me an invoice, give me a quotation. So I'll replace it with, or interchangeably call it pro forma invoice, but quotation is the standard name. A document representing prices of items before negotiation, before order, before making an order, but also before engagement, because I just give you prices, not considering how much you want to buy. You may say you want to buy more quantities, so I should reduce for you. So before an order is made. And a quotation may not always be followed by an order. I may decide not to order. You can give me a quotation, I get another quotation from another person, I compare, I buy from one of them, or I may not even buy any. So a quotation is a price estimate given by a seller to a buyer before a sale is made. It helps the buyer know expected cost and decide whether to proceed with the purchase or not. So take an example, the components. It's prepared by Kigali Interiors. It's addressed to Nyira Bega Enterprise. It represents each item with a office desk, 5 in quantity, 7,000 per a unit, then total. So you'll find that it also captures tax. It also has a grand total, or the sum of the total prices involved. And it has a valid date. So the valid date tells you that actually prices may vary, may change depending on the day. So if you place your order after days, the valid date has expired, you may be subjected to any increase, or if he has given you, if the seller had given you a discount, and then you take longer to place your purchase, then you may find prices have changed, and then the offer will be based on the current prices. Pro forma invoice is the same kind. We use them interchangeably with a quotation. But pro forma invoice is more on an item. Sometimes after you do the negotiation, you can agree on the final price, and then you ask for a pro forma invoice on that amount. He may not change. He's not mostly allowed to change what you agreed. The quotation represents average prices, the general prices, but a pro forma mostly happen after you have already agreed on the prices, and you say, okay, after we agreed on the price, can you send me now the pro forma invoice? Sorry? Then you pay. And then I order. Yes. I order. But at least I know you will not change by sending me a quotation, because when you send me a quotation, it may sound that you have not engaged. At least this one, if you engage, then you can tell a person you have reduced 10%. Or you have said you are not reducing. Okay, send it to me. Pro forma invoice. It's kind of a commitment. Someone has at least showed interest that he's buying. It's different from quotation. Quotation, no, the person who requests for quotation is not really, has not shown much interest, or has not shown definitive interest in buying. But pro forma invoice, it's a kind of an initial agreement that an offer is going to happen. It gives the buyer detailed price and payment terms in advance for approval or planning. So it's much clearer than the quotation, but because it has reflected the primary engagement with the customer. Purchase order, as the word suggests, the purchase order is an official request made by a buyer to a seller for specific goods or services. It starts the buying process and confirms that the buyer wants to purchase. So you specify description of the products, how you want them, and everything. But of course, you have to take into account the quotation or the pro forma invoice. Because the purchase order has to be based. You can even put a reference of the purchase order. So that if someone had, for example, given you a pro forma invoice with a discount, then you can refer to that so that he gets to know, because customers could be different, could be given different pro forma invoices. I can give you, for quotation, I can give you, all of you, I can give you standard quotation, that the price is this, price is this. But when it comes to pro forma invoice, I can give you your pro forma invoice and your pro forma invoice, depending on how much the relationship we have, the business we have, how long we have been my customer. That's why I can adjust my quotation to give you a pro forma invoice specific to you. So then the purchase order, you may want to refer to a purchase order, or you may want to refer to a pro forma invoice, so that I can know, oh, this is suppose you are sending this purchase order to a person that is new in an organization, but you got the pro forma invoice from a person that has maybe went for leave. So you will have to specify which pro forma invoice that you are referring to by stating the prices you want the company to offer you. So the purchase order just determines how much and the quantities that you want from the stores. Then the invoice will follow, is a document that shows the buyer owes the seller for goods and services sold on credit. Mainly an invoice is given because you have not paid cash. But today, you know, things have changed. You can get an invoice when you have already paid. Normally you should get an invoice and then pay. But you can pay, then you demand for an invoice later. Okay. Yes, you can buy, for example, you can go in a restaurant, you eat. After you eat, then you say, give me the invoice. Yeah, so accounting is evolving. But normally, an invoice should be given before payment is made, so that actually the payment is made against the invoice. So in modern accounting, no organization should be paying before you get an invoice. But individual level, most of the time we consume or we buy things, and then we ask for invoice as a receipt. So the receipt and invoice, neither they act interchangeably. So it is used to request payment and keep a record of the sale. So it's also another important primary document that every financial literate person should always mind about recording the information on it. Even now, when you buy with a VAT invoice, you can use it to claim some bonus, some rebate bonus. RRA can reward you for, remembering to ask for invoice. So, as students, if you buy and you don't request for invoice, remember when your item is lost, there's no any other proof that that you can use to claim that this product is yours. If you bought a TV and they stole it, but you keep the invoice, when police recover those TVs, they will call people. Can you show you own this TV? If you don't have an invoice, then you don't have the product. So keeping the invoices, these documents, not only helps us to make decisions, but they also support ownership. They support, you can claim transaction. If you have a court case, for example, you are claiming that someone you sent money and did not give you the product, you can use the invoice document as a source document. Receipt can be interchangeably used as an invoice. Some companies, instead of giving you an invoice, they give you a receipt that you have paid them.
Yes.
Consumers normally use receipts. Companies use invoices because many companies don't pay you before you serve them, before you deliver their products. So, but for individuals, we consume and then we ask for receipt because we have paid. We have to track our money. How do we know we have tracked our money? Because if I come to a restaurant today, I may forget, 2 weeks after, I may forget about me coming to this restaurant. But if I keep a receipt, I can even know I paid less or you charged me more. I can pay you money and then you give me a receipt that is not corresponding to the amount I paid. Then I come back to claim. So any claim, any guarantee, if you go to buy a fridge or a camera, they give you a warrant of 1 year and you don't keep the invoice. When you come back with the item to be replaced, they ask you for an invoice.
Yes.
Because that's the only way they can base when spending. But if you don't present that sort document, then that company is lucky to deny you the replacement. So delivery note, many companies nowadays, they are not doing this, but this is a best practice. When you deliver anything on a person who purchased, you have to prove you delivered. Because as smart accounting people, as smart literate individuals, any act you make, you may not need it today, that day you make, but in future, for example, if you have a court case, you deliver laptops to me, I paid you, you took the computers, but you did not sign a delivery note for me. And then tomorrow you present this to police and say, I bought 10 computers, they have not been delivered. So many of us, we involve in transactions and we don't remember these things. You buy, someone delivers something. If you're a small business, you deliver bread on someone's door. He gives you cash and you don't track. For cash, I will show my SMS that Momo cash I paid using. This is my Momo message. Show me delivering bread. I don't have a camera at home. So you say, no, I delivered, it was 7 o'clock. I was in a yellow shirt. That is not proof. Can you show you delivered? Because if I take the payment to court and for you don't have proof that you delivered, then I win the case. Then you deliver again. So delivery note is not many times used, but it's very important. So people, accounting students, even all of us who want to have financial literacy as a package in our daily lives, we need to remember these documents because they are proof that a transaction happened. How did a transaction start? How did it end? Because it will end with a delivery note. If you sign a delivery note, you have accepted that goods have arrived. But if you don't, then businesses, you say you received this much money and you offered goods to a person. An auditor will ask you, where is the delivery note? What proves that you delivered the goods? Because tomorrow we may expect this person coming again and say, where are the goods? So you have to show us where is the delivery. Then we have debit note. A debit note is sent by a buyer to a seller when goods are returned. or an amount is to be reduced. It helps correct and reduce the amount owed to the seller. So sometimes transaction may happen and you may have an error, and you want to show that actually you were supposed to give me 10 but you gave me 11. So this 11 can be represented, this 11th item can be represented by a debit note. So who do you debit? Who do you debit?
The customer.
The?
Customer.
The customer.
Yes.
So if for example, I sent you, you sent me goods, and if you sent me goods and they are not matching, I requested for 10, you gave me 9. What do you produce as a document between me and you? So if he's returning a defective USB cable, a returning item, which means if I bought 10 and one is defective, I am bringing back 1. So you are telling me this is the USB cable, quantity there are 5. There are 5 that are returned. 1 is 2,000. Total is 10. Total debit, that's 10. Who are you debiting?
Debiting supplier.
You are debiting?
The one who supplied the seller.
The one who supplied. And then you sending, who is sending it back?
The buyer.
The buyer. So you unpackage your container, you find the defected items, you list them, and you make a debit note. You send them back in their good form, then he received, then he signs. So now, most of the time, we buy stuff and we find some of them have been defective, and then we just carry them to the shop without making a debit note. Then you find someone who sold the items to you is not in the shop. There is a new one. Then you just say, keep these things, I bought them yesterday, but they are not working. There is no document. Then how does he really, transfer them to the person that made the transaction? How does he even record them? So we have to get used to these documents because they are very essential. They make us look organized. They make us really sound as financially literate people. So if you're returning any good, that were supplied to you, you have to fill in this form and send it back to the company that sold you the items. If they do that, what does the supplier do now? They make credit note. Credit note is usually used by a seller to a buyer to reduce the amount payable. It is used when a buyer returns goods or there is an overcharge. So you may do it when you are responding to a debit note, but you can also do it after knowing that actually there was miscalculation. You want to credit the buyer without him claiming. You can produce it and say, oh, we instead of charging you this, we charged you this. So we credit your account. So it is used when a buyer returns good or there is an overcharge. If you have overcharged the customer and you know it's not a good practice, you can change. Instead, for example, if a blender, you had costed a blender for 50, but you want now to change it to 45, you can do a credit note, crediting the customer. So like Wamahoro Ruiz is credited with one blender, so returned a damaged blender. She returned a damaged blender, but now you want to credit him. So you're going to do this and send it to him and to her, and she's going to sign, and then the transaction will have been settled. So it's just an exchange between a buyer and a seller, depending on which transaction took place. So these documents sometimes if some of them are relevant today, others are no longer being used, but for the best practice, for the best basic accounting or basic financial literacy principles, you need to keep them. You need to, because systems have come. Many companies are no longer using these things. They buy through systems, they pay through systems, they claim through systems. But for the general knowledge, you have to keep them in mind, much as you're not using them in daily lives, but at least you know what they mean. So another source document that keeps a lot of information nowadays, especially nowadays, is the bank statement. Because, like, as a person, I spend a lot of money every week, and I request MTN to give me a mobile statement, Momo statement, to see what did I buy and with who. So I can record them now on a separate sheet or in a computer Excel sheet. So if you're using a bank, at the end of the month, you can request for bank statement, and you will see a lot of information in that bank statement, and you can be informed. You say, "Oh, I paid double. They charged me this much in water bill. I used, now we are buying even electricity using a bank account. You pull your account from the bank using your mobile phone. You transact using your phone, but you're using your account. You pull your account to your screen, your phone screen, and then you spend from there. So if you don't go back there and request for a bank statement, you are losing a lot, because it reflects how you have been spending as a person or have been earning income, because you earn using a bank account and you spend using a bank account. Most organizations spend in a bank and earn through the bank. So requesting a bank statement for organizations, for business, and for individuals is very important, because you will see who credited you, how did your bank debit you, for which reason, and for which transaction. Like, for example, it reflects account number, it has the description of the activity. Then, for example, on 1st August 2025, there was a deposit of 200,000, and on the 3rd August 2025, payment to supplier. So you can go up and down to scrolling to know how this transaction took place. If you find there is something that is mismatching your understanding and knowledge, then you can ask the bank to give you more details on how this transaction took place, especially when you don't remember how these transactions evolved. So you have a voucher. These are old documents, but we use them every day, but we don't call them voucher. You want to pay someone and you tell him, "Nsinyira hano ko wakiriye ikintu." Sometimes you can call it a receipt. Others can say, okay. But a voucher is an internal document. It's not an outside document. It's an internal document to release cash. It can be petty cash. It can be any resource. I can be even having a store and then I have items there and you want to take them. I say produce a voucher to release it. So a voucher can be multi-purpose. It's something, even families have vouchers. You can have, petty cash in the family and you want to, because if, for example, if you are giving your kid school fees, do you say you want invoice from him? But you can produce a voucher and say school fees, you put 100,000, so that tomorrow, if someone asks you, where did this money go? You say, I paid school fees for you. Yes. So, like, you have been going to school, but if we ask your parent, how much has he paid for school fees since you started school? He will say, oh, I don't even remember, because they don't keep vouchers. But at least you, because you have financial literacy, you're going to keep vouchers so that at the end, when she's graduating or he's graduating, you say, Do you know how much you owe me as a parent? Do you know how much I put in you? Then you bring those vouchers from elementary school, nursery, secondary, university. Then you keep everything. She says pocket money, you produce a voucher. Everything you document it as a, voucher. Anything that gets out of your income should have a document called, like for example, paid internet bill for the office, MTN, 25,000. Majezi Pascal, this could be a parent, authorized by women Aris. Because you need to put at least 2 authorizers, because if you are only one, if you have a kid, your madam can authorize, then the husband also approves. So at least 2 approvals. It's the best practice, because if you have only 1 approval, you can abuse it. People just sign. But if you have at least 2 approvals, it's much better. So a voucher, is a document that proves business transaction happened. It authorizes payment or receipts and keeps a record of accounting for accounting. So vouchers can also be used to receive, not only to get out, but most of the time it's used when you want to justify how a resource is getting out of your coffers. But some organizations use vouchers when they are even receiving to prove a transaction, especially when you buy something and there is no proof. You are on the road and you want to buy a gisheche on the road, and there's no receipt. He cannot give you a receipt, of course, because he's a small holder. He does not even have a receipt. And then you can say, let me produce a receiving voucher. Then you sign, you make it, then he signs that he has delivered the gisheche to you. Then the document is yourself, it's you who made it, and it's you who keeps it. But at least you are recording that I bought this thing, because he does not give you an invoice. So you can use a voucher. At home, you can produce vouchers. At school, if you have pocket money.
By using pen?
No, you have pocket money at school, and school canteen don't give invoices or receipts. So you just buy and take. You buy it as you take. So when you reach home and you are paying cash, so how do you know your money has? Some students go to the office administration, to the school administration, to report to mafaranga when they have eaten the money, because he is not keeping the record of the expenditure. Then he says, hey, where did my money go? He's trying to remember, and then he goes to the disciplinary master to say, I've lost my money. Where was it? In the dormitory. Where? In the bag. When you already eaten it. So, but if you produce a voucher, you buy rindazi, you record a small voucher, a small paper. It can be even made by a pen. Then you record that voucher to say what rindazi, how much, the 200, when, at this date, from who. You say, if you don't know, you say canteen. Then you sign, then you keep it. So if they store your money, then you can say, but they ask you, how much money was in the bag? Because you don't remember, you say, okay, let me calculate. You get your vouchers, you total them up, then you know, oh, they have stolen me 700,000. Because you have added your voucher. They ask, get us the proof. You say, I had this much money, and I have used this much. So the balance is the one that they stole. That's how you get to know. But if you don't produce vouchers, receiving and sending, receiving and outing vouchers, then you'll never be able to track with source documents. So source documents are very important. I told you they are no longer used by so many organizations, but at a personal level, I advise you to introduce these vouchers. Payroll. Payroll is kept by companies, especially when they have permanent staff, or they have consultants, or they have. So payroll, shows the payment you paid, especially for labor, and you want to track who received what. Because when we receive salaries, we don't sign for the organization that we received. They just send money to our accounts. But the organization will keep the payroll, especially when it's produced by the bank. So you make a payroll, you send it to the bank, you specify which account to credit, then they do the job. So if someone comes and say, I have worked for this organization 10 years, they have not paid me.
They're going to look at the payroll.
Yes, you have to go to look at the payroll and the bank account that was credited. Otherwise, if you don't keep this, for example, if it is, you were handing money to employees in hands and they don't sign vouchers, they don't sign anything, then they take you to court that they have never been paid. The only proof you can produce is what? Is a payroll. And this payroll is an internal document. It's not a bank statement. But this payroll, nowadays you make a payroll, you produce one check, then you take it to the bank, then they credit. But at least this is an internal document. If, for example, bank loses network and a person is claiming has never been paid, you can use this to say, I have paid Wase Krodin 300,000 at this time, and this allowance, and it has really produced evidence. So you can use these documents to really prove a transaction. So I want to ask you, I want us to share among you, in all these documents, which one do you find that you can use as a person? Okay, many are for organization, but which document do you think can help an individual person? At least you know you are you're accounting students, but those who have not done accounting, they don't have basic knowledge, especially those ones online that are following us, they don't have basic knowledge of accounting and financial literacy. Which documents do you think at a family level they should be keeping?
Bank statement.
Bank statements?
Yeah, it is clear bank statement. It is needed document because to know the amount of money that you have deposited and withdraw, and to make sure the balance that you think is on the bank is also meet with the one you have at the bank.
The what? The bank?
The bank statement.
The bank statement.
Yeah.
So you think every individual person need to have a bank statement, need to request for bank statement?
Yeah.
How often do you think a bank statement should be requested?
Every month.
Every month, at least every month.
Yeah.
If you have many transactions, maybe you can request after a week. So you are saying, you said what's the purpose of a bank statement, mainly?
Because somehow it helps us to know the amount of the money we have at the bank. Because somehow you can think you have a lot of money and you make a check that is overstated check. So you have to make to see a bank statement and know the charges the bank have taken and the deposit you have made, the withdrawal you have made, and to know that if the payment you receive on the bank have been approved and the amount has been already at the bank. So this will help you to manage and know the way the movement of your money, and even the outstanding that you allow to the bank, like saying paying a rent to be on this date and you make outstanding. So those money you control it. So to make sure that there is no any mistake that you made in your calculation of the money, and you know how is your pocket that you have.
Excellent. So Eric is saying a bank statement is very crucial for both business and family. So which other document do you think a family in Rwanda or a student that is following us on this show should really be keen on knowing? Like, which one do you think is really crucial in making you track your transactions?
Voucher.
Voucher?
Yeah.
How is it so
Okay.
relevant?
As a student, can use a voucher when he or she wants to buy something can use a voucher for recording when he or she spent some money for buying some snacks, some drips, some what. He can use voucher for recording that money he or she spent on that items.
Okay. So Yvonne, can you tell us the basic information that should be on a voucher?
What?
The basic information that is captured by a voucher, like if you want to design yourself a voucher at school
Okay.
on a piece of paper, how can you design it? What
Okay.
are key information elements that a voucher can pick? For example, you said you buy chai from canteen. How do you produce a voucher? What does a voucher capture there?
Okay.
Yes. Let's hear.
Okay, thank you. How I can design the voucher, I can provide the date that I buy that thing, amount of money, and
The
I
name
say-
of the item?
Yeah, the name of item, where I buy it, maybe from which person, all, yeah, and I can sign on it.
Okay. So, Blaze,
Yes.
do you have any idea on what information a voucher can capture?
That's all. It will be the date, the place, the amount. That's it.
The place,
The amount,
the amount,
The item.
date.
the item,
Yes, and the date.
and the date.
Then you sign on it.
Then you sign on it.
Yes.
Don't you put the name of the person that sold it to you?
That's also the place.
The place.
Yes, that's
So the
That's
place
my
can represent the person.
yes.
If it is a mandazi you bought from canteen or you bought on the road, so you say you say the name of the canteen or the person who sold to you.
Yes.
Okay. And then if it is not a product, suppose it is a service.
Yes.
You record the service but also put a purpose. Why did you consume this? Why did you have to pay this? For example, it can be a loan. You borrowed money from a student, then you want to pay back. Then you say date
Student.
payment.
Yes.
Yes. So the function, the purpose of the payment should be clear. And then for the personal level, you don't need approvals. You approve yourself. But for internal organization, for organizations, they always have to have 2 approvals. Why do you think in organization you need more than 1 approval?
To make sure that
Let me ask Benja.
Mm.
Why do you think in organizations vouchers have to be approved by more than 1 individual?
I feel like the reason behind is that the voucher can be realistic.
To be?
I said, I think the reason that the voucher can be approved by more than 1 person is that the voucher can be realistic.
Realistic. Any other idea? Why do you have to make it signed by 2 individuals?
to be certain and sure that the money has been spent. To be sure by 1 or 2 persons, or 3, yes, to be sure that the money has been used for the purpose.
Yes, for the purpose, to reduce abuse. Because people can want to abuse, but at least if you have more than 1 approvals, you get some controls.
Yes.
And for accountability, because at least you know who did what. Because someone can be mistaken, but if you, at least you have 2 approvals, you can be sure that something happened. So another question. While we study these resource documents, do you think having or keeping resource documents can help third parties? How can they help third parties other than you? You yourself, you are a beneficiary, yes, but third parties, how can they benefit from you doing bookkeeping? remember you are transacting with so many parties, and these parties may not be keeping any document. You are only person keeping the documents. But how can other people benefit from your financial skills?
Okay, like as a receipt, when you buy some items in supermarket, you need a receipt. So that receipt, it contains some VAT.
VAT, okay.
Yeah, that VAT, it can go to the Rwanda revenue, which is taxes. That taxes, the country uses some building, some infrastructures.
Excellent, thank you, Yvonne. Because keeping a record of your transaction, the benefit does not only stop at you. They are also extended to third parties, especially like government. If you keep an invoice, then you can be able to, the government can be able to know that this transaction happened. And sometimes government, even systems can lose network or things that can happen. You buy something, but if you kept an invoice, at least, do you know a will? A will. If you die or you happen to die, you leave something behind to show what was on your mind or what you wanted to happen when you die. You leave a legacy. You write something and say, when I die, this is what will happen. But many people don't produce legacy. Like we no longer produce agenda. We used to have an agenda. It used to be a physical book where you record, it's called diary, or some people call it agenda. So you keep diary, you write everything that happens. You say, at this time I've met Eric, we have discussed this on this date. You turn a page, every day you record. People used to do this. You record everything that happens. We have gone to Reb, I have met so and so, we have gone to canteen, we shared tea, and it is me who paid. I paid 500. Those records used to be very useful, but nowadays it's not a practice that people, keep.
How useful?
Because, like, for example, if you keep invoices, I was coming to why you have to keep these documents. You can buy land today. You keep your invoice. And you have not called everyone in your family to say, I have bought land. Then, God forbid, you happen to die abruptly. And no one knows if you have a land anywhere. Or you have paid school fees or what. Like, they don't have any clue about this transaction. But if you keep these documents, now, your kids are going to benefit. If you have a bank statement, you have account, everything, they can be able to say, oh, they search in your house and they can retrieve something. But if you have bought something and you have not asked for an invoice, and this company bought a TV from, they have not yet delivered. But at least if you have an invoice or quotation, we can say, did he buy this car?
Let's claim it.
Let's claim it. So keeping books, doing bookkeeping does not only help you, it can help even your descendants, it can help your family, it can help. So your parents may be keeping these records for you when you're a student, and the parent is keeping school fees, bordereau, bank slips, your report cards, everything. And then you happen, for example, to have an accident or something, and then the police will come to your home and say, where was he going to school? How has he been performing? Has he been paying? Has he not been paying? All these records are kept. There are students who graduate, and you finish a academic year, you ask for a report, they tell you, no, we are not giving you a report, you owe us money. And the parents say, I paid. The school say, no, prove you paid. The parent doesn't have any voucher, does not have any receipt. You come to bursar's office, you give money, and you just walk out. So this student, if the parent is smart enough to keep transaction records.
But at schools there is what you call bank records.
Bank records.
Yes, at school. They can go and at school and to the accounting, to the accountant, sorry, and they say check on your list. You will see that I've already paid.
Yes, but do you know why we ask for bank statements? That means banks also make errors.
Bank make errors.
Yes, you can. Do you know, we ask bank statement to do bank reconciliation because we keep our physical documents with us, and many times you can find that your documents are more correct than the bank. So that's why you compare and say, this is what I was recording. Whatever you give the bank, you record. Whatever you give the bank, you record. Then at the end of the month, you say, give me the bank statement. Then you compare. Then you can say they made an error. Instead of debiting you, they credit you. So you can be sure. So you cannot trust that what you give a bank, because you use the bank, so you just go home without any proof. Because you are paying and then you lose your bordereau. So bank system can be corrupt. Anything can happen. And if you have not kept your bordereau, then you have no money. You have no claim. So it's very important that much as we trust these good systems, you are buying with the phone, we are buying with this, but remember, these things can save you. I will tell you a personal story. I used to bank in a bank called Bank Populaire. It's an old bank. Now when Bank Populaire sold itself, or they merged with KCB, now KCB said people who are banking with Bank Populaire all the time, we used to pay 10,000. When you pay 10,000, you become a shareholder of the Bank Populaire. You keep banking when you are a shareholder. Like that was only bank in Rwanda where customers were owners. Whenever you open a bank account in BPR, you would pay. We used to call it Mugabane Shingiro. You pay 10K, then you become a shareholder of the bank. But if you don't want, you just put your money and you don't want to pay to the bank 10K. So now, when the bank was bought by KCB, so KCB started to modernize it, because we used to bank with Utabo, a small booklet where they could put debit, credit, to know how much you had. So now, time came, they said, you cannot be a bank shareholder if you don't have that booklet. And they issued it in 2000, in 1999. So most of us had lost those booklets. So for you to claim that you are a shareholder, come and register it with KCB that bought the bank. And come with that card. Because for us, we trusted that the bank has the proof, so we don't have to keep those. Yes, you move from one house to another, you throw them. So because you think they have the records.
Yeah.
Yeah, but they said no, we don't have records. Just prove you are a member. So my other family members went with the books, they had them. Me, I had no such a booklet, and I lost money. Yes. So trusting systems that they have, schools have records, the bank has records, it becomes very difficult. So that's very important for us to keep these financial transactions in hard copies, if possible. In hard copies. That's when we can claim, that's how we can track the transactions. And sometimes when you go to a bank to request for bank statement, they charge you 3,000, 5,000, depending on the bank. So why charge you when you can produce a local proof that this was the day, this was the voucher, this was the headmaster, he received the money, he signed. You get? Even bank slips, they fade. Haven't you seen bank slip fade? Like, fading is, like the ABM invoice. You get it today, after 1 month you can't read it. Like, figures have disappeared, the ink has dried. But ink with a pen, it does not dry. Ariko ink, this ink of typing, you keep it for some time and it disappears. But if you had a voucher, you sign, you received, you also sign my voucher. I keep my voucher and my invoice. If my invoice happen to do something, I'll show you, you signed here that you received the money. So those are the importance of bookkeeping. So bookkeeping is different from accounting. Accounting is a profession, is a sophisticated science, but bookkeeping is so basic for us to keep any transaction we make. So who can tell me why do we keep these transactions? The one reason you think we should keep these transactions?
Because there are evidence. There are evidence that shows the transaction has been made.
Yes.
Which will help us in auditing.
In auditing?
Yeah.
But you are thinking in a professional, no, I mean as a person,
Yes.
you know, a regular
And
person.
also it avoid wasting.
Wasting,
And unnecessary spending.
unnecessary spending. I want another strong
Budgeting.
budgeting. Everything is correct, but
It helps us tracking income and expenses.
yes, correct. But who can give me the key
It helps to manage your money, how you spend, how you use, how you earn.
decision making?
Yeah.
That is the word. We are studying financial literacy skills to help us decide. Because at home, I keep records of water bills. Wasak will bring me an invoice today, I record. Today, at the end of the month, I use the Metrokibe of this much, I keep it. Then another month they bring, I keep it. Another month they bring, I keep it. Now, after 6 months, I total all of them, then I divide 6 months. Then I know my average. My average water bill. So if my average is 12 Metrokibe, I know that if I hire a maid, someone helping home, and she uses a lot of water, I'll say, hey, but what about this month? This month is much, much higher than the average of last 6 months.
Yes.
How are you using water? Then I can use a home camera to see how she misuses water. If she's washing one round and pouring there, fetching another water. So how do I know that you misuse water at home? Because I don't spend much time at home. Every morning I'm going, I'm coming late evening. But I can know how much use how much you waste water by analyzing.
The camera.
Analyzing
the statement.
the statements. Because I say, in March, Wasak billed me 16,000. In April, for Metrokibe, 8 Metrokibe. Then I'll add them together and I'll see the average. So an average will give me a picture that actually, on average day, on average month, I use 15,000. But what happened this month that they are charging me 18,000? So I use those invoices to analyze and decide. I can say, I am suspending you, I am hiring another person because you are using a lot of water. You don't know how to use water. So I am deciding, I'm making a decision making because I am analyzing. If I had not kept these documents, like Wasak, I pay on mobile money, they go. I don't record anywhere. I don't record the Metrokibe I consumed. Then I am not able to decide. Okay? If you, at your graduation, you are saying, Daddy, thank you for, teaching me. I thank Mommy for doing this and that. But you don't know how much you costed. You costed us. And in my speech at your graduation, I say, Braze from nursery to this time, Braze has used 20 million.
20 million.
In food, in transport, in school fees. Yes, and Braze refused to say, no, Daddy, you are lying. I bring all the invoices. And I say, you know what, Braze, this is a loan to you. You are going to pay it. You are going to pay it because I am getting old. I cannot work. Instead of you instead of you paying me, saying me, Daddy, give me, here is some money for you to, you are favoring me. You think whenever you are giving your parent, you are giving, you are donating. It's not a donation, you are paying back.
Paying back.
Yes, so you should not be, waiting for your dad to thank you. No, Daddy should say, actually, you still have a balance for me. Many of us, our parents die before we pay them because they really paid, because the school fees you consumed, all the salaries are going to be earned by you. But for him, he was spending on you. So if we kept records of your school fees payments, at least you can talk on a table and talk about how much so that when you are giving me money, don't think it's a favor or you are supporting an old parent. Yeah. This old parent paid a lot of money for your education. Even food at home. You can say on average you are buying for 10 people at home, and excluding myself, I can know how much my kids are eating, and then I can say, okay, on average, this one consumes this much, this one. You can even sometimes know who consumes much more. Anyway, that is a piece of joke, but we are really coming down to summarize why do we have to be smart to keep transaction records. Now, in saving culture that Rwanda intends to promote, we are encouraging students, we are encouraging young people, we are encouraging students to think about saving for their long-term life. You start saving through Ejo Heza, you save a little, so that by the time you need capital or you need to retire, you have enough for you. Because I am producing money today, but in 50 years, 20 years to come, I will not be able to work. Beyond 60 years, no company will hire me. They will say, you are done, go home and eat the balance you have. So if you have not saved, you have no life.
Yes.
So, and you can't be calling your kids, okay, support me, support me. Some parents take it as their own and they call you for support. But remember, you have to, the kids have responsibility on other family because they are building a new family. Yes. You have a wife, you have kids, they are taking the money. And the parents have no money. And you go back to say, I rent you money, it will not work. Because school fees are not taken in Rwanda, they are not taken as a loan. It's just free money you give to students to go to school. So the culture of saving starts by understanding financial literacy. Understanding that you earn this much, you want to spend this much, you want to save this much. But the starting point is at least to have money that is enough for your needs. That's the first step. At least make the money you have all you need to survive. Then the second step is to say, why should I eat everything I have when I know in future I won't be able to work? But there are people who cannot save, but who cannot even use what they have. They use what they have and they still borrow. So the first step to save is what? What is the first step towards saving?
Budgeting.
No, the first step, I was saying, the first step, if you want to save,
Yes.
first of all, first determine yourself that I am going to use this money that I have for all I need.
Yes.
With no debt, I am surviving with my income, living in your
Planning.
living within your budget. You live within your budget. You have you earning 10,000. Design your life to live like that. Don't rent a car. Don't be in a house, expensive house. Don't drink. Because that's all you have. Then the second step is to say, how can I keep this 10,000 as an income and still save? Then you reduce on the things you were consuming. But the first step is at least to first sustain your life with what you have, without a debt.
Somehow we use that principle of 50%, 30% to 20%.
You're a student at a pad. Haven't you seen students at a pad who don't live within their budget?
Yes.
They consume their pocket money, it's finished, then they want to, sweet talk to you so that you can
To
buy
borrow.
them tea. They are begging all the time.
Bread.
They are borrowing pens.
Coins,
So-
some other-
yes, the teacher gives assignment, and then they are like, do you have an extra pen? Or 15 karam. That's a sign you are not living within your budget. You are outside your budget. You are spending more than you earn. So that is the source of bad culture of debt. Now, students go in a debt unknowingly. They are always begging. They are always borrowing. Someone he can borrow even your uniform. You have 2 uniforms, and he wants to borrow from you a uniform. You have 2 pairs. He has 1, and after 3 days, his is dirty, and he wants to borrow yours. He's borrowing a pass. He's borrowing literally everything. So because he's not living within his budget, so that person cannot save. So the first step to save is to first live within your budget. Sustain your budget. Make sure all you need at least. So if someone comes to you and say, Yvonne, why are you not saving? You say, I am not saving for now, but at least I am living within my budget. So that is number 1 step towards saving. So no person can think about saving if at least you have not started thinking about living within your budget. So if you go to school and you spend the whole term living within your budget, knowing that I don't have money, I will eat school food. I don't have much, I will not do movies. I will not buy a phone. I will not call my Inite. I will not, you reduce on your spending. And then after a time you say, oh my God, thank God I have not begged anyone. I have survived on my own. Now the second step, but do I save? Can I save? So if now you go to saving, how can you save? Suppose you have been living within your budget. All your money has been consumed that term. But next time you have a goal to say, I want to save at least 10K. To go back home with it.
Yes.
What can you do? Remember you had been struggling, but you at least managed to live within your budget for a term. What could be your second step? What can you do next to be someone who saves?
As a student, I can use for buying needs, not a want.
Not a want. So you go back to your budget and say, this is how I have been living. What are the things I can remove and still survive? I cannot remove uniform. I cannot remove soap. I cannot remove Colgate. But what are things that I can remove and still be clean and still be eating and still be really survive? What could it be?
Somehow you can list the times you go to canteen and you say, if I was going to the canteen 5 times in a week, so maybe if I reduce, I go 2 times, it will be okay to me and I will save more money.
Yes, this is how people save on accounts. Because you have accounts, as students of accounts, you have accounts. You have an account called canteen. You have an account called maybe movies. At school we used to pay to watch movies. You can have an account called Colgate. You can have an account called soap. Those small accounts as a student, if you want to save, you could probably say, this account, I use money to go to canteen. What do I buy in canteen? I buy mandazi, I buy biscuits, I buy milk. Then you ask yourself, if I went to a shop and bought a carton of milk, is it allowed for school to keep for me? They can say, okay, they can keep for you. Okay, how long does mandazi stay on a shelf? Like if you made mandazi can stay for 2 weeks. Good mandazi, if there's no too much oil, you can package them and they stay for 2 weeks. If you are buying biscuit in canteen at 500, you can go in shops which sell at wholesale, because in canteen they also want profit. It means they bought it somewhere. So you go where they buy, you bring them, so you keep them there. So now when you want, instead of going to canteen, you can say, I have my milk and my biscuit. I go, if you are fearing that students may steal it, you go and keep it for, with the canteen or with the bus or whoever, or animatrice. And then you can always go there to say, can I have my one biscuit? And or you have a rocker, you can have a rocker and lock everything. You have your biscuit. So you are still living in your budget, but you have saved on every account. Remember, everything you have been consuming is very essential, but now you are changing how to consume it. Remember, you have not left canteen. You are still going, but in another way. Now you have it. So if you save 5,000 on canteen because you bought things yourself, you ask for permission every weekend, you go home. When you are coming from weekend, you do what? You have those stuff. And then if you are a boarding student, you can save on these ones. Then if you saved 5,000 on this account, you go on another account. You say, I have been maybe using this soap, which is very expensive. Can I have an alternative soap? Can I buy Tembo? Tembo lasts for long. Instead of going for medication, Savo, Medicare, this protects or what? Can I use Tembo? Tembo is healthy. Is it healthy? Yeah, it's safe. Let me buy Tembo instead of medicated soap. No, you save 5,000 on soap, but you are still using soap. So saving is not leaving food or not going by transport. If you are using a bus, you can use a bike. You save on transport. Now, if you add savings of all those accounts, then you get your 50,000. That's how people save. They don't leave what they were doing, but they change the way they were doing it. If you are using electricity, you can change to solar and save. You don't say no electricity, no, because you need light. Okay? If you are buying jibu or water, mineral water, you can say, let me cook this water for myself so that I save on this account. So you have life accounts, you have water account, you have electricity account, you have this account, you have this account. So instead of saying, let me, because you are saying wants and needs. But I can still enjoy everything else. Everything I can still enjoy. Not reduce, not say, if I was eating chicken or no chicken. If I was taking water or no water. No, most of the things are very essential. If it is entertainment, if it is movies, I go to movie, I pay money. But can't I download some movies on the internet and be able to, like, keep doing everything? Me, I keep doing everything. I don't reduce anything. You cannot tell me I was doing this, so I stop it. No, I say, how can I still do it, but in a fashion that is not expensive? If a girl is spending on treating hair, you can say, my natural hair, or you put plant or something like a marasta or something like a wig. A wig can be multi-used. You can use 7 times. Every time they call you for a party, you put a wig. Then you go. Then you save. You save on that. So let's take a break. When we come back, we are going to discuss more details on financial statements, the basics. But at least you know the steps of saving, and you know the importance of keeping financial records or transactions at a personal level and at a business level. So we thank people who are connected online. We thank everyone for your attention. So let's have a short break and we shall be right back. Thank you.
dialogue will serve as a platform to reflect our progress, identify challenges, and prioritize actions to improve inclusive education. Together, we will remain steadfast in our mission to ensure education for all, leaving no one behind.
Together, we can ensure teachers are supported and equipped to fully have inclusive classrooms, empowered to educate the decision makers and leaders of our shared tomorrow.
It is a privilege to join you today for this two-day national dialogue to engage in meaningful discussions on the critical topics of inclusive and special needs in education. As we deliberate, let us remember that inclusion benefits everyone. When we embrace diversity, we enrich our education system and society. By supporting learners with disability, we'll cultivate compassion, resilience, and innovation in our classroom and communities. Let us use this dialogue as a platform to listen, share experiences, and co-create solutions. Together we can build an education system that truly embodies our values of equity, dignity, and excellence. Thank you, and I look forward to a productive discussion ahead.
The Rwanda Basic Education Board Multimedia Production Studio is on a mission to transform education through technology. With a vision to become a leading multimedia production hub, the studio is dedicated to enhancing digital learning, fostering innovative educational content, and ensuring accessible, high-quality education for all.
It will also enable teachers to improve themselves and support each other's growth. We aim to bring this program to all schools.
To achieve this, the studio focuses on developing high-quality multimedia learning materials, supporting cost-effective digitization, improving capacity, and ensuring learning continuity. By expanding broadcast channels and streamlining production, it aims to make education more efficient and widely available. The studio adds significant value by reducing costs, increasing in-house production capacity, and ensuring rapid content delivery through social media, television, and radio. From multimedia learning materials and live science experiments to edutainment programs and digital textbooks, the studio embraces a diverse range of content. Its delivery methods include pre-recorded and live-streamed programs, talk shows, documentaries, and sign language videos, ensuring inclusivity and engagement for all learners. Through innovation and technology, the Rwanda Basic Education Board is shaping the future of education, making learning more dynamic, interactive, and accessible.
I believe strongly that when we collaborate, you can go much further than it be we're full on in.
So I'm Dorit Rikta, World Art and Leaderships with the Ministry of Education in Rwanda, when the Rwanda Basic Education Board, and also with the World Bank for Rwanda, so that we can make great strides in foundational learning for all teachers in Rwanda, also for all of the learners
what we
in
heard
Rwanda.
from all the speakers should invigorate us, should re-energize us, to make sure that we leave here with that dedication, and commitment. And we go forth as the young child that spoke yesterday to move towards less talking and more action, as she said. So let us work together to indeed make a difference that our children will feel and their children would benefit from.
Honorable guests, it's my deep conviction that solid early education will become all the more vital as time advances. Achieving sustainable development will require our children and their own to wield every available ounce of intellectual, social and emotional intelligence to ensure that education and growth actually translate into progress for all.
Welcome back from the commercial break. We are yet again here to sum up what we have already discussed. We thank people online. We thank people who have asked questions. Students, keep your questions coming. We know online there are parents, there are students, there are guardians in holidays. They are engaged on this show, and many of them will even see this show after it's recorded. So let's go back to our animal, our financial education, and try to summarize what we have already covered. So we have covered the importance of knowledge, especially financial knowledge, because we understand our lives today depends on finance more than any other time in our lifetime, because we used to be farmers, we used to be domestic animal raiders, but now everything rotates around finance. We no longer eat because we have grown crops. We are in money economy, so we are using a lot of money, and we need financial decisions to be able, sound financial decisions to be able to move, to save, to invest, to pay taxes, to earn. Everything needs financial literacy. So we cannot say we are going to live like our parents lived. This is an era of knowledge. So financial knowledge or financial education skills are part and parcel of a modern life. You need them to be able to consolidate your financials, make financial decisions, budget, plan, do evaluation, file taxes, make income statements, decide where to go. know what is working in a business, what is not working. As a person, at an individual level, you're going to record your transactions so that you can decide which are your personal goals and how do you get them financed. So we have received a number of questions online. Nigera Innocent has asked, teacher, how does proper bookkeeping directly impact business owners' ability to make profitable decisions, and can you give us real-world example? Yes, definitely. You will help me, students in audience here, to answer Nio Njira Innocent, who is asking, how does bookkeeping directly impact business decisions? It is the other question we try to answer. How does a business benefit from keeping records or keeping books of accounts? How does a business benefit? Because he is asking, how does the owner's ability to benefit, ability to profit from the business, how does it affect the keeping or not keeping? How does it affect the ability of the business person to profit?
Okay.
Eric.
On that question, you can say that business records help in the business by way, because if you keep us in analyzing, so we take those expenses that we have been paid and we see the source of income that we have, and you analyze, we see if the expense that the cost that it takes, it is equal to the income that you generate. In business profitability, if you have those evidence, it helps us in make the process of analyzing. We analyze, we see if the business is doing well or we're achieving our goal according to that information that we have.
Yes, bookkeeping. The question is, how does bookkeeping affect the ability of the person running the business to profit? How does, because I have to teach you how do you approach a question like that. Those questions of analytical thinking, someone say, how does it affect? You'll have to give two sides. How does keeping or not keeping affect a person? So you have said by keeping. Can you now tell me how does a person who does not keep, how is it affected? How is he affected by that fact of not keeping books?
So if a person works without keeping any records, this will make him be affected by somehow the business will be closed up, because he have not analyzed that something can be reduced, some cost may be ignored or reduced in the business, and it improves other sides. So this will affect him, because without analyze, you cannot analyze without having any records. So if you don't have those records, you find yourself you have been closed up your business.
So he's also asking asking for a wildlife example, and I'm going to help you develop this. So any person doing a business that is not interested in keeping records, his decisions are not really based on evidence. He just thinks about things. You have seen people having shops in villages. Someone keeps a small boutique. He does not record anything. You come, how much is the soap? He says soap is 5,000. You pay. He keeps the money. He gives you the soap. No delivery, no receipt, no, purchase order, no nothing. At the end of the day, if someone stole soap, he's not going to know how many he sold and how many is left. When you ask him which product is what we call fast moving, in every shop there are products called fast moving products. Soap, paraffin, Colgate. There are things that really move fast, and there are things that take longer. You have a basin, and ivumbi likavaho likaijaho without a person buying, and it stayed for 2 weeks, and it has money. And now the chewing gum, the cigarettes, they are moving fast, but they have a little profit. But the jerry cans, the basse, the what, they are there, but no one is asking about them. Then someone comes and asks, do you have isuka, do you have a hoe? And you don't record anywhere. You just say, no, we don't have. Remember, we are two. I am you, you are in the shop, and I am also replacing you in the afternoon. So we are not keeping any records. You have someone to support you in the afternoon. This person is receiving orders. Someone asks, do you have a hoe? No, we don't have a hoe, sorry. Then in the afternoon I come. No one comes to ask for a hoe, but maybe ask for, say for example, he asks for a thermos. And I don't record anywhere. Then next time I go to Kurangura or to go to purchase wholesale, when I bring those items, when I go to Karitse Mateus and ask, I want to buy wholesale, they ask, what do you want? I don't know, I don't remember someone asking for a hoe. But if I had recorded, hey, you said you want a hoe? Oh, we don't have a hoe, but next week I think 3 people have asked for a hoe. This is a form of purchase order. People are giving you orders, but you are not recording. So next time you go to Karitse Mateus, you want to buy, then you bring again the basins that are not moving. Even no one is interested in the basin. So you have to be recording to say, okay, this basin or these shoes came 2 weeks ago. Now it's a month, no one has asked for the shoes. So I have to record. Next time I'm not buying shoes, because maybe in that village, people are not putting on shoes. So every information you get, you have to do it to record. So now, if someone comes and takes a soap, he steals a soap from me, and I know I have sold 5 soaps, I have been recording everything, I will say, oh, they are stealing my soap, I need to buy a camera, because I don't know which soap was stolen or which soap that I took home. If I take something from, for example, you take sodas or juices for your kids to enjoy, and you're not recording, you are eating your profits. But at the end of the day, they ask you, how has the shop helped you? You say, yeah, we are surviving, but I don't know which is which. But your kids are taking sugar from your shop. They are taking biscuits when they come from school. They are passing. You are not recording. Then at the end of they ask you, what is your profit? You say, this month I have bought a bicycle. This is my profit. But you're not adding biscuits that your kids took. You're not adding soap that your family uses. Because when soap finishes, the kid will come, Daddy, we need soap. You give, but you are not recording that this is a profit. So then you will only count the bicycle you bought from the money as profit. So you'll say, you hear people when they give them mic to ask them how they are doing, say, uyu mwuga w'ubuvumvu wabagejeje kuki, urabona ngura mituweli, umugore arambara igitenge. Those are the things they say because they cannot quantify, they cannot be sure how much they have. For them, they count things that surround them. They say ngura mituweli, abana bararya, mbona mbese everything is going, but he cannot tell you that ubuvumvu or beekeeping generates this much because they are not recording. So we don't expect you to be like them. You should be able to know that beekeeping, ubuvumvu generates this much. You say, on each liter of honey, the cost that I pay to generate this bottle of honey, 1 liter, I pay 2,000 and I sell 7,000. So the margin is the difference. But if they ask you, how is the honey business going? And you say, I was able to buy my wife igitenge and I pay mituweli. That is the language of people who have failed totally to account, to keep books. But if you keep books, you cannot say we are eating, yes, that is the profit. Yes, we are eating, kids are dressed, they have new clothes for Christmas, and that's the profit. Is that a good statement as a business person?
No.
No. So, keeping books and not keeping, you can really compare and see that there is a big difference. At least when you make a loss, you know what is bringing a loss to you. Maybe they have stolen some things from your shop. Maybe things are overstaying in the shop. Because you have to know this basin came with which date, when are they buying it. You say, this one are staying. I am going to buy the first running products. So how do you know the first running product in a shop? By recording. By saying, hey, this one has just come on the right one. This bread came today, but no one is asking about the bread. Should I keep bread? But a mandazi is moving. So you record the mandazi. So next time you buy mandazi. So keeping records benefits. We have seen taxation. RRA will come and say, you have to pay taxes. And the guy say, how much am I paying? It is not RRA to tell you how much you are paying. It is you to tell them how much you are paying. Because they are not doing business. It is you who is doing business. You should be computing. On this one, there's VAT. On this one, there's withholding. On this one, there's this tax. Or there's excise duty. There's tax forms you should be able. Because RRA will wait for you to declare how much you got and how much you earned in taxes. And then, but RRA will go to shops and say, please pay your taxes. And say, how much should I pay? Hey, do I do business with you? It is you who is doing business. So people are not really keeping books seriously, and we looking up to you to change this culture. Because if you start, like students who are doing accounting, students who are following this show, you start keeping vouchers, you start keeping bordereau. At the end of the day, you will be able to analyze and take a right decision that is going to change your future, that is going to guide your plans. Another question here is, how can digital tools and mobile money system like Mcash, Airtel, Momo be recorded in traditional bookkeeping system? Everyone has got a phone. This is a very great question. Everyone has got many people have now, you know, mobile penetration is really almost at 60–70%. So every Rwandan is holding a phone in hands, and you don't need the internet to keep records. So instead of paying a person cash, you use mobile money, you use Momo Cash, you use EasyPay, there's a lot of applications that you can use. And if you use them, you have to do another reflection at the end of the day to say, okay, can I get it from the phone to a piece of paper so that I can be able to analyze it? Because, for example, you have been paying recklessly. Someone say, you're paying using a number. Another one is saying, I'm paying using Momo. When you take a motorbike, from here you are going to take motorbikes back home. A motorbike to your place, it can be average 500, 700. But you don't care a motor that has a code and a motor that is paying with the number. So you are going to just say, stop motor, you just go on top of motor, climb, and then motor drives you. By the time you reach home, do you have a code, MTN Momo code? They say no, on a number. If you pay no number, 300 is good. Because you do not want to be financially literate. Because you know there are two people on the road. For me, if I am stopping a motor, I first ask, do you have a Momo code? If you say I don't have, then there are three on the stage. I say, who has Momo code? Then the one with the motor will come and win the tender. But for you, you just go stop and just be on a bike. Remember, these people are watching. I have lost a customer because I don't have a Momo code. So next time he's going to get it. But you guys, you just use them and then they are free. Okay, they say, they don't care. These customers are illiterate. They just go in a motor and they don't know that I am actually benefiting, because on a Momo code, who pays? The motor. But when you're using a number, who pays? You. So if you have financial education, you are able to analyze every transaction and say, how much am I paying? So at the end of the year or like a month, you can say, transport with Momo, I have paid this. Transport with a number, I have paid this. Every transaction you pay without code, you are paying extra coins. So the question is, how does these mobile applications help businesses and individuals to get these records and put them in an appropriate filing so that you can analyze them? Because on the phone, it's not easy to analyze them. So you have to every day record daily transaction using your phone. Because I don't work with money. But at the end of the day, I will open Excel sheet here and put my Momo accounts. Whoever I paid, the purpose. Why did I pay him, the purpose? And then I will decide, I can decide, I have packed using, whenever I pack, I pay 200, 300. Then I can say packing. Last month, I used packing of 10,000. This month is 15,000. Where did I pack? Then I start reflecting. I remember going there, I remember going there, I remember going there. And then I can add up and find that actually someone stole my money. I can go, because like when you park, there is this KVSS. They charge you money for parking. Yeah. And sometimes they can overcharge you. They send you a code, you pay without knowing, and then you have paid. Instead, sometimes I go to press 500, I add another zero, it becomes 5,000. And I drive home. Then when I reach home, I analyze, I have used parking of 15,000. And every other time in a week I use 3,000. What happened? Then I check to discover I have paid 5,000 instead of 500 because I just added zero. Then I go back to that place because there is a number, tracking number. You go to that parking and say, you owe me money. What is proof? If you have eaten, I go to your manager. I came here, parked at Chimirongo Market. Instead of paying this much, I paid this much. What is the record I have here? Then the system, they'll have to refund me. So if you don't have financial literacy, you lose a lot of money. You take wrong decisions like going on a motor that has no code. All those are the stuff that you need really to think about. Financial literacy does not only help when it's only recorded. Decision making in finance, in investing, in saving, depends on how much knowledge you have about. We studied about bonds, we studied about stocks, all those options of saving and investing. You cannot do them, you cannot analyze them if you don't have financial literacy. So financial literacy is very, very important nowadays. There was a time when there was a dry season in those parts of Nyagatare where animals were really not having enough water. And they were, people were claiming, please government help us with water, please. Literally there was no water to feed animals. And to get trucks carrying water, trucks, carrying water from maybe Muhazi to take water to those farms. And you feed cows using a big car, a big truck, a road, a tank. Then you transport to these animals. Then the cost of getting water from Muhazi to the farm was much more than the value of animals. So you use 50,000 to feed a cow of 20,000. Then you lose how much? 20. Yes. So the cow has no value. But the input you are putting in a cow is much more than? Yes, the output. Someone laying pigs, and pigs are eating than the value of a pig. But he keeps feeding. Because he does not, record to say, okay, how much is animal feed? And how much is this pig going to generate? So he keeps selling, he gets maize, mixes with some njanga and all this, and feeds the pig. Pig grows fat, he sells much, but if you analyze his costs are bigger than the pig. And he's saying, yeah, we are fine, we are buying mitwell, we are doing this, my wife is dressed, but he's in loss. So those financial literacy thing is really something that can give you, because decision making, knowing where to go, which business to start, you first analyze your statistics. You say, but if I do this, some people don't even count their labor. He says, okay, I have paid rent, I have survived, I am doing, they don't count how much they should pay themselves. So they say, okay, I have profited. But you ask him, if you were a staff, like if you are not your own business, if you had employed someone, don't you need salary? So you have to pay yourself, you pay rent, you pay everything, then you remain with profit. But if you are not literate, you will not think about your labor. You wake up early in the morning, no enough sleep, you go to work, you don't make your salary count, so you just say purchases minus sales, profit. But you are not paying your labor. You are not paying opportunity cost. That's also a small economy. You are not, if you had put this money in the bank, how much would it generate? But you didn't go for that. You opted for this. So all those are the questions to think about. Another question is, what's the difference between a journal and a ledger? And why do we need both instead of just recording everything in one place? Great question. We normally say accountants have a lot of time to waste. Why do you have a lot of books? Ledger, journal, what, trial balance, all these, they are saying, some people are saying you are wasting a lot of time. Why don't you immediately record in a journal, in a ledger, and you leave out the journal? Because journal does not classify. Ledger, at least it tries to classify accounts. But he's asking, who can answer from this room? Who can answer? Why not record in one book? Why do we have to keep two books? One in a general form, the other one in a specific accounting classification. Yes, Eddie.
So first of all, I would like to tell him about to remind her the meaning of accounting. Accounting is where we record, we classify, we summarize, we interpret, and the financial report, and we provide those information. So it's why we have many documents. In a journal, we record. So if you record something, you have to have some description showing what transaction has been made. Is it a payment? Is it an expense we have paid? And you make some description. So in ledger, we classify. We say this account was for cash, this was for expense, this was for purchase. So, and then we go to trial balance, we summarize. We say the summary of this thing.
Excellent.
After we make a balance sheet.
So, Eric, you are saying there are information that you will find in the ledger, in the journal, that you cannot find in the ledger, especially description of a transaction. Some information are recorded there and then when you are buying a product, but you can't transfer everything to a ledger. A ledger kind of summarizes the movement from a journal through a ledger to a trial balance. You go summarizing, so that the decision maker, because for example, a manager of a business, say MTN, will not see a journal. He is going to look at the bank statement, financial statements, balance sheet, to take a decision where a company is going. But an auditor may be interested in the journal to say, but when was this transaction recorded? What was the purpose? All those information cannot be found in the trial balance, not in a ledger, but in a journal. So the reason we keep these two books is for decision making. Some may need just an oversight decision to say, okay, this is this, but some decision may need a detailed information beyond the information on the face value of a number. Because the more we transit to financial statements like balance sheet, we don't have a lot of information. We just have a picture of where a business is standing and not details. So the more you want details, the more you come down up to the time when you go to journal. Even journals don't have enough information. Some auditors can even go to source documents, the primary source document, and you hear someone asking, where is the invoice? Where is the purchase order? You present a journal, but he tells you, no, journal is not enough. I need the purchase order, because not all the information from the resource document can be put on a ledger, rather a journal. A journal has specific columns on which you record those specific information. Thank you. Another question is from online. For small business that deal with customers who can't read and write, how do we ensure primary document still capture who was involved information accurately? So he's asking, some business people or some, even our parents don't know how to write, the most important, write and read, the most important thing is to seek support. Really, we have got, like now they are using, many traders are using EBM. EBM does a lot of accounting free of charge. If you just give invoices to people, at the end you can do an income statement. It can generate cash flow statement. It can generate expense report. It can generate sales on credit, everything you just saw. But you need an expert to help you. So you can just use issue mobile money, rather use mobile money or use VAT invoices or EBM. At the end, you hire a consultant, you hire someone to help you inside, to say, I have been selling this, but I'm not recording them. Another system that helps is stock taking. There are stock cards. You can have a shop, and on a shelf of juice, you have a scorecard of a stock card of juice. Every time they take a juice, you don't need to write in, oh, I have sold juice to so and so. You can say minus. You can teach someone just to do agatire. Agatire all aka X. That one does not need really a person who can read and write. You can teach your parent if you don't know how to write. We are printing you a stock card. Every time you sell water, you put agakonikamo. And then we shall know how many water bottles you've sold. So even illiterate people, we can help them by just giving them small tactics on how to do records. So now at the end, you call someone who did accounting in that place or someone who went to school and say, this is how my shop has been. I always, whatever I say, I put agakonu water. Like you take shelves of water, they are here, and there is always a paper on that shelf. So whenever you sell, you put agakonu, you give water. Whenever you sell, you put agakonu, you give water. So those ticks can be accounted to say how many did you sell today and how many did you sell the other day. Okay? So these papers can help. Even people who are illiterate, they can get support from their students who go to school or their neighbors. So you ask for support. So he was asking, how can we help? Because we know some number of people who really don't know how to write. But financial literacy is very, very important. And you don't need really to read and write. It's very essential to read and write. But even when you can't read and write, you can still do accounting, because accounting is an art. So it depends on how much you can use the art to your benefit. So the last question is, what do you think? Have you seen situations where combining this document might actually cause more problem than it solves? Then he's asking, if you combine these documents, If, for example, you have a ledger, a journal, you put all those documents together. He's asking, isn't there a risk when you have these documents? Because he's saying, couldn't there be a disadvantage of keeping records in those books? Do you have any idea about what could be the negative consequences? Because he's saying, can't it be a disadvantage instead of an advantage? How is accounting? How can it cost business money?
Somehow, you say disadvantage of keeping the records.
Yeah, he's saying keeping those records, isn't there a situation where you say you regret why you kept the records?
Yeah, somehow it will be some disadvantage if you have not have enough security. Some competitors will store your information and they use it to compete with you. And if they see the price you have purchased your products and how you sell them, and they see your transactional balance sheet, and they analyze everything, they will know your weakness and everything. So this will lead to be stronger because they have the information about you.
I think that's a very correct answer. You know, business depend on staff. They hire staff. You can hire staff, and this staff analyzes your data and say, okay, he buys this from Japan. Okay, he buys this from Simba supermarket. So these are his supplies from his suppliers. This one he buys from China, a company called Guangzhou Trading. This one, then after this guy is going to start his own business because he knows your suppliers, he knows your contacts. So that's why it's very important to keep safe the financial records. Not every person can access the financial record. That's why you have a financial department, and it should always be closed. You should always keep your data safe because it is always at risk. Because you're not only competition, but internal information keeping should be safer than you think, because even a person, you can choose not to declare tax. You see, you can choose not to declare tax. When it is there, you say tax payable 2024, and you decide not to pay. But you have shown that this is tax to pay. RRA, when you file, RRA will see that you have bought something, you have sold this. Sometimes RRA will come to your office because they are using the information you post. Every time you ask for invoice, they put your name. They say, this guy is trading. So your information is kept somewhere. And then after 1 month or 3 months, after a quarter elapses, they say, why didn't you declare? You say, I didn't make profit. Are you sure? You bought this thing from Brarigwa on this date. You sold it to this person. You are using his TIN number and everything. Now the information was corrected by EBM system. You have to pay this money. So this innocent online is asking, isn't there something negative or something that bad can happen in your business because you are keeping records? Yes, nothing has got no risk. Sometimes people evade tax because they don't keep books. But those who keep books, some people are good because they enjoy being transparent, but others could only say that if I had not kept, RRA would not have known me. If I had not kept, this person who made his own business would not have stolen my business. If I had not put, you can even have a payable account. For example, you are a store manager and someone brings goods. And they bring goods, and goods you ordered, they are in excess. You ordered 15 computers, and now you have received 20 by chance, because the other store did not record well. So they gave you a packet that is, you can even buy a shirt and inside you have money there, or you have another t-shirt inside the t-shirt. You buy a tube itio, you know itio? Yeah. And then inside there is a gatio gatoya, because they were trying to reduce space. So when you go for Kenkairi to ask for matio, they just throw in the car, but inside the big tube there is other small tubes, because they wanted to reduce storage space. And then when you reach there, you find there are many, and you don't want to produce a debit receipt or debit note. Yeah. So you keep them, you start selling them. But this stuff you are using has seen that you took a lot of material from the shop. And then by the time you say, go out, you are not using, you suspend the stuff. Then he goes to the other shop. Did you know this guy took a lot of your material? Because this guy recorded that we received this material instead of this. He records, but he does not communicate. Then these records can be used against you. Sometimes you can record things, but you don't want to report them. And then if a person runs on them and say, oh, hey, is it the case? Ah, okay. You can be paying this one a salary of 20,000. This one we are paying 30,000. And everyone knows that they are on the same level. They are doing the same job, but you are saying this one is 20,000, this one 30,000. If you keep documents that, okay, voucher, sign for me that you received the 20. Another one he comes through the door, sign here, you have received. You don't communicate, you are not friends. Then I keep here. So one day, I forget my keys. I tell you, can you close my office and bring the key? You first go, hey, where is this one? The moment you check, your friend is getting much more than you. Then tomorrow you are like, you don't want to work. You are like, how come? I have worked for this company. They are not appreciating. Eric is, sometimes even late, but he's paid much more. So he takes you to court. He says, we are doing the same thing, but he's discriminating me because I'm a woman. Then the gender monitoring will come and say, why are you not treating same people doing the same job the same way? And then you are in court. Because there is a law, prohibiting discrimination. You are discriminating people because of where they come from, because they are doing the same job. People doing same job should be paid same money. So you're keeping books, records, then it can be used against you. So we are saying if you decide to keep books, but make sure you are complying with the laws, with the revenue regulation, with everything. Okay? So his question is, isn't there any bad things about keeping? It depends. Everything is good about keeping records, but it depends how you use this information. If you keep the information and you are not transparent, you are not a good person, you are not a good business, you are not a transparent person, we don't recommend you to do bookkeeping, because bookkeeping is for smart people, for transparent people, for faithful, honest businesses. So if you are cheating, we don't advise you to go for bookkeeping, because it will be used against you. If you are cheating and you are keeping books, that's very bad. So, as we conclude, I'm going to give a quiz. So you do it at your own. And at the end of this program, we are going to ask questions to evaluate who performed well. And probably, you never know, you can even give rewards. So I'm going to give an assignment or a quiz on this so that you go back home, think about it, and come back with questions. You can post your ideas on the YouTube channel, or both for ICPAR and LEB. You give your feedback, but the most important is that you have to memorize some of these things. So the first question. Yes. Okay. Yes. So the first question, what could be the steps a financial literacy person, a financial literacy person can take to save and invest. Especially when he has not been living, when he has been living on income beyond his budget, on income beyond his budget. You can cancel income, just living beyond your budget, living even on, cancel on. So the question, people online, if you have where to write, what could be the steps a financial literary person can take to save and invest, especially when he has been living beyond his budget? So we had said that someone has to live within your means or your budget. So now we're asking you, what could, if you are financially literate, now that you are financially literate, how can you move yourself from a situation of living beyond your own budget, borrowing, living on a debt? How can you move yourself from that situation to a situation of investing without any additional income? Don't assume he got another income. He's still living on the other same income. How can he move from that point to another? We are coming back to the same question again. How? Another question. How can journals, keeping a journal help a business or an individual to make informed decision? To make informed decision. No, informed decisions. How can keeping journals keep a business or an individual in making, not to, in making informed business decision, informed business decision. So people online, we are repeating the question. What could be the steps? A good student should always have a pen and a piece of paper. We are not projecting the questions on purpose. We want you to listen and write yourself, because when you listen and write, something enters your mind. How can keeping journals help business or an individual in making a business decision, an informed business decision? So that's question 2. Another question. How do you advise? How do you advise? How do you advise a illiterate person? How do you advise illiterate person to handle bookkeeping? Question mark. Two last questions. Number 4. When we say information is power, when we say information is power, what do you understand, comma, what do you understand, comma, what do you understand? Where, by the saying, quotes, open quotes, when you run, you earn. When you learn, you earn. Close quotes. Close quotes. What do you understand? Open quotes. Hey, this open quotes? Okay. Open quotes is like this. Just this. Okay. And close quotes. Okay. Udukubo. Yes. The Udukubo, from when you learn, you earn. So the last question. Why do we call financial skills life skills? Those are SC questions, very critical and critical. Why do we call financial skills life skills? Those are 5 analytical questions for you to think about. Maybe we could pick one for an assessment at the end of this program. So this marks the end of our session. I want to thank all participants live in this class and people online, students, parents, guardians, following us live on YouTube channel of REB and ICPAR. We thank you very much for your attention. We have covered a lot of financial skills or financial literacy knowledge, and we have seen that knowledge is power. So go back, revise, go through the content, research, improve yourself, so that by end of this program or by the end of this holiday package, you are able to at least pick a few things that can accompany you in your financial journey. I remain Mr. Jackson. I thank you for your participation. Next time, see you.
turacyafite urugendo rwo kugira ngo turusheho kumva ese autism